What's up, everyone? It's Caddy with MoneyVest, and markets here rallying quite a bit, especially the NASDAQ pushing up a little bit over 1%. The S&P 500 was also green, and I think the Dow Jones added a little bit over 100 points, about 127 points to close green, up about 39-40 basis points, with the 10-year yields once again rotating back lower a little bit on the day. So hope you guys are doing great, and we are starting to see a little bit of that technical rebound from the market that we were expecting. In my yesterday's market update, I did mention that it was a little bit surprising the markets continued to sell off. However, we do have a lot of oversold levels for the markets more broadly speaking, maybe not so much with technology per se, but we did have, more on a broader level. I'll go over some of the charts here in today's video, that we do have some oversold conditions, which is exactly one of the reasons why I did pick up a swing trading idea on the NASDAQ ETF, and also did dollar cost average midweek. Dollar cost averaged into VUG, SMH, a lot of individual stocks. I added a few companies. Again, links are going to be down below if you want to join, of course, be a part of our MoneyVest community. I did open up a few more spots because it's been getting sold out almost every single day. So we've had a huge influx of new members joining in. So if you want to get access to all these alerts, links are going to be down below. We'd love to have you on board, and you can expect to communicate and engage with a lot of our members in the private chat, where we're talking about fundamental analysis, technical analysis, options trading, swing trading. There's going to be people from all over the world that are going to help you understand better what's the right strategy for you. And of course, if you want to simply invest for the long-term dollar cost average, be my guest, because we do a lot of that as well. And I did also mention in the Discord, I just want to quickly go over that we are going to also include Excel spreadsheets for you to download, so you can download the debt repayment spreadsheets, retirement calculators, balance sheet spreadsheets, all those different things, as well as the members only private videos that are also going to be included. So far there's over 42 videos that you can access right away with my shopping list, my buy values, my buy targets, and of course, different types of educational videos. And also, I've introduced the MoneyVest stock reports, which we are also going to include now moving forward, where you can access individual Google Docs. That's going to be stock reports for individual companies with my fair values as well. So it's going to be a lot of detailed analysis as part of this as well. So again, of course, you can get access to all of these text analysis that we have been sending out, and where I believe the markets are potentially headed. So Dow adds 100 points to snap a 3-day losing streak as Treasury yields ease from a 16-year high. The market has been dragged around by interest rates, something that we have talked about. We're seeing a divergence, a big difference between fixed income and equities, and investors remain on edge and are looking towards Friday's release of September's non-farm payrolls. Now, that is going to be a very, very, very important report, because as we know, that non-farm payrolls is really what's going to dictate the level of the strength of the economy with respect to the labor market, the jobs report. And of course, that's what's going to dictate the Federal Reserve's potential, or really the level of hawkishness versus dovishness. If we get a very strong non-farm payrolls, unemployment rate continues to be very, very low at under 4%, well, that's only going to pave the way for the Federal Reserve to continue to raise interest rates, because the economy is strong. So what we want to see is somewhat of a modest to weaker employment report, which could once again spark that rally and spark that discussion that, okay, the Federal Reserve should indeed be done, considering that higher interest rates and higher for longer narrative is actually starting to play a role in the overall economy. It's actually starting to affect the labor market in some sense. They mentioned that I don't think you get a broader rally participation until rates ease up, and that's only if rates ease without some sort of financial crisis or hard landing recession. Every day we're on this high on interest rates. Every basis point deeper into restrictive territory probably reduces the odds of a soft landing in 2024. And that's true. The higher, the longer we stay here, the bigger the problem will be eventually. But don't mistake that recession and economic downturn with a opportunity to not buy, because that's usually going to be the time for you to find deals, not just in the stock market, but also in the real estate market. In a lot of other businesses, there's going to be some compression. There's going to be some tightening of the overall market conditions. And as a result, you will find deals. I can tell you from experience. I mean, I've been doing this for almost 10 years, and we've got members that have been doing this for 40, 50 years. We've got people in our Discord that have been in the market for several decades, and they will tell you that every time there is a recession, there is a bear market, there is markets coming down, is the time to put aside your fear, be bold, and take aggressive action to take advantage. Execute during those times. And this is not a very common situation. In 2022, we were excited. We were very excited. We were enthusiastic of the market sell-off. Why? Because you don't get those opportunities very often, right? Statistically speaking, these are very rare events, very rare occurrences, and that's why I'm so excited, honestly, and so straightforward with you. I'm not gonna bullshit you into telling you that, oh yeah, you know, just be patient, you know, whatever. No. Do it, take action, and of course, you know, if you find opportunities, you find deals, don't hold back, right? That's what I'm doing. If I'm finding opportunities, in fact, I'm taking a swing trade on TQQQ right now because I do believe that short term there is a potential technical rebound in the markets. Now, Tim Cook also dumping a chunk of Apple shares, but this was already a pre-planned sale, which is scheduled, you know, sale in 2 years. And ADP numbers on for Imperials came out 89,000. Which was obviously a significantly lower number compared to the consensus of 150,000. And this right here was the state of the market. Tesla having a very strong day, up almost 6%. Google, Meta, Amazon, Microsoft, Apple, Nvidia, AMD, all pushing higher very, very nicely. Energy struggling because oil prices did drop pretty dramatically. If you come over to crude oil, take a look at that red candle, down 5%, now under $85 a barrel. So pretty substantial sell-off. That was a resistance that we were talking about at close to $93, $94 a barrel. So that right there is was the resistance. And we're seeing a big sell-off here. RSI also coming down. And the next support really is going to be inside this green rectangle, sitting roughly at around $81 to $82 a barrel right now. And as a result, energy stocks really, really struggling. But nonetheless, technology moving in the right direction, getting a little bit of that rebound. From a technical perspective, energy, the biggest loser here over the last 1 day. Comm services and technology, the biggest winners over the past 1 week. And over the last 1 month, of course, still all 11 sectors are down. So in my opinion, there's going to be some stocks, obviously not all of them. And I want to be very clear that, you know, if you take a look at the markets on an aggregate basis, S&P 500 on an aggregate basis, yes, there is some level of expensiveness, or in other words, that premium is still getting priced in because, you know, right now S&P 500 is at a little bit over 4,200, right? And my fair value is at closer to 4,000. So given how high it is right now, 4,260s compared to 4,000, it's still 4 to 5% more expensive than where my intrinsic value is on the S&P 500. But individual stock-wise, there are deals, right? There are stocks right now that are still trading close to their fair values. They've been coming down. And look, at the end of the day, if your goal objective is to invest for the long term, say 5 years, 10 years out, I mean, 10, 20, 30% plus minus isn't going to make or break the deal when you are really investing for the long term and you've got a time horizon of 5 years to 10 years out. Yes, we look at the fair values, we look at the intrinsic values, and we try to get them down to as much as possible. And sometimes, yes, you know, I've been a victim of that when I like to fixate on that fair value, that no, I'm gonna only buy the stock when it comes down to that prices. Sometimes, yes, you want to be in that mindset, but at the end of the day, you got to have some more flexibility, right? You got to allow for the stocks to move in that range because, you know, 5 years, 10 years from now, you're not going to look back and be like, yeah, I should have bought, you know, Enphase, or I should have bought, you know, Amazon or Tesla like 10% cheaper or 20% cheaper, because the thesis is the bigger picture. We're looking at the bigger picture 5 years, 10 years down the road if you're investing for the long term. Of course, if you're trading, it's different. When you're investing, it's completely different. So I want you guys to understand that difference between these two. So over the last 1 day, orange juice for the win. Natural gas here also pushing higher. Very, very strong move to the upside. We got palladium, coffee prices, wheat, soybean, volatility, gasoline prices coming down. We got Bitcoin here just a little bit over 27,000 and Ether just over 1,600 as well. So I also want to touch on volatility because we got up to as much as 20 levels and we sold right back down. And, you know, I posted this on my Instagram yesterday. By the way, connect with me on Instagram. I do post, you know, at least according to me, some interesting stories about the U.S. debt, about volatility, about the market conditions, you know, profit and losses, gains and everything. I post everything on my Instagram as well. So make sure that you connect with me there. The link's going to be down below. But I mentioned specifically that it is time to buy, get ready to buy is what I mentioned with the chart for volatility, pretty much suggesting that when the VIX is high, it's time to buy. And we did get up to as much as 20, 21 levels. So, you know, it's possible that we do get another spike, maybe up to 23, 24, considering how muted the VIX has been all this year. But that's only going to create better opportunities for us to dollar cost average into the market, and of course for individual stocks as well. So keep a close eye on that. Oil prices obviously selling off, so that's good for inflation overall. Now going over to the S&P 500, so we did see a little bit of a rebound here, although we have, you know, broken down. I would say we've still broken down from this uptrending channel, this higher low. Maybe not on the weekly chart, because weekly we're starting to kind of push back higher. So maybe I should be looking at the weekly chart, because this right here is still, the week's not over. We got a couple more days left, and bull bulls are doing everything in their power to push us back above this higher low. So that's still pretty positive here. We'll see where we end up closing, and resistance is going to stay put up to 43.20. And if we do get a breakout past that level, it can, put us on the target back up to as much as 44.45, 44.45, 44.50. A couple other technical analysts have also pointed out that level at the lower high to be the next target in case we see a breakout past 4,300 for the S&P 500. Talking about the NASDAQ here, consolidating sideways around 13,150, so up over 1.3%, back over 13,200. So once again, the bulls stepping in, doing everything in their power to make sure that we don't really see a significant sell-off or a breakdown. I mean, we've already pulled back quite a bit, right? We were down at 10% from our recent highs. That in itself is quite a reasonable sell-off for the market. Now, more specifically, I also want to talk about some other indicators such as these right here. So percentage of stocks that are trading below their 200 simple moving average for the NASDAQ specifically, we're coming back to the same level as far as December of 22. And you know what's even more interesting? There's an index called NDFI. There we go. So NASDAQ 100 stocks trading above their 50-day moving average, right? So if you click on this, if you're in a TradingView chart, TradingView platform, by the way, link for TradingView is also going to be down below. Click on this, NDFI, hit enter, and look what happened here. Down 47%. This is delayed, by the way, so this is delayed by 1 day. But 90%. We're looking at 89%, almost 90% of stocks were trading below their 50-day moving average on the NASDAQ 100, and we are potentially heading back down to the same level as we were back in October, right? So we right here are at 10 to 11%. During October lows, we got down to 5.8. Of course, the lowest level was in September at under 3%, but we almost came down to the same level as back in October. That's exactly my thesis as to why I want to be a little bit more, tactical in that swing trade towards TQQs, because this is very oversold levels technically, right, for the NASDAQ 100 stocks. And that's exactly why I think QQQs and TQQs could have potential upside here, over the next couple of days going into next week. So that's one thing to focus on. And of course, we've already talked about these indexes, these indicators, such as the S&P 500 stocks trading above or below their 20-day moving averages. And this is S&P 500 stocks trading above below their 50-day moving averages, which again is sitting at 93% right now, which are trading below their 50-day moving average. So very, very high numbers, showing us the oversold conditions in the broader markets at the moment. Now going over to Apple right now. So Apple here starting to move back higher, even after the downgrade I think it received. And of course we did see the news from Tim Cook. But this right here is going to be those lower highs, which again, this right here is going to be a better representation. But this is really where we're hovering right now at 172, 173. Resistance all the way up to 179 for Apple, and we are still within the context of this downtrending channel of lower highs and lower lows at the moment. Talking about Amazon, and Amazon also here trading inside this downtrending channel. We've got a little bit of a gap to fill to the upside, but this is going to be that downtrending channel of lower highs and lower lows. Talking about Tesla here, Tesla with a very massive gain. Next resistance is going to be all the way up to 267. I ended up closing out my call on Tesla, one of them, for about a 60% profit. And then I opened a new one literally 1 minute before the markets closed because it was at the high of day. So I got pretty decent premiums with a nice return on collateral over the next 30 days. So again, if I do the math here, $4, let's see, that's going to be a little bit over 2%. So just under 2.1% is the return on collateral over the next 30 days. On the call that I sold, annualized, it's going to be over 24%. So I'm happy with that. And, if Tesla gets up to 300, I actually lowered my strike down to 300 on that call because 300 is a big resistance. So this right here is a green rectangle, as you can see right there. So Tesla's got a lot of supply to break out of in order to get past $300. And if it does, that's fine. It's going to allow me to trim some of my position and also generate that additional return for Tesla because it's going to rally another 15-16% while also lowering my cost basis with the premium collected. But if it doesn't, then it's free cash flow. And that's why I love basically trading options also in the meantime. So that's going to be that resistance right now coming up to 265, 270. So that's going to be that lower high, but Tesla with a very nice gain on the day. Support level getting valued at 240. Talking about NVIDIA, and NVIDIA here just really consolidating sideways, still somewhat getting rejected at this lower high that we talked about in one of our previous videos. Support level is going to stay put around $400 per share. So this right here is going to be that support level to watch for NVIDIA. Advanced Micro Devices also having a very nice momentum back up. Support level getting validated at about $100. Lower highs and lower lows inside this downtrending channel. So next resistance, of course, that lower high. And this right here is going to be that lower low for AMD. So lots of weakness, but at the same time, $100 continues to validate as a very strong support. Talking about PayPal and Square, and PayPal here pushing up over 2.2%, still hovering around $58, $57 near 52-week lows. So that right there is going to be that support level. So there's not really much for us to go over other than the fact that it's really consolidating sideways and moving in that sideways consolidated pattern. And of course, that resistance is all the way going to be at $69 to $70. We got a gap to fill all the way to the upside. Square, on the other hand, continues to be very weak. So literally no change, so nothing at all. And this right here, of course, is going to be a resistance for Square at $42, $43 with a potential next support down to $34, but it is really oversold. So I doubt that it's going to see some more accelerated sell-off. I think the selling pressure potentially can get exhausted here, and it's possible that we do start to see some momentum back up for Square. Talking about Meta platforms, and Meta here also moving higher very nicely, 1.5%, still kind of drifting sideways at that resistance at 307, 306. So this is going to be that downtrending channel, still showing signs of weakness very much until we break past that $307 wall and that resistance at $311. I don't see Meta kind of trailing back up to this resistance up to 326. That's going to be, right now a big resistance level to watch for Meta right there. This is going to be that level to pay attention to for this stock. And if you do get a breakout past this area of resistance, then of course, next resistance going to be all the way up to 325. Talking about Netflix, and Netflix here, just consolidating sideways, no change whatsoever. So not really moving all that much, still trading at a support at the moment. So lots of consolidation inside this green rectangle. And then finally, of course, we got Microsoft, Google, and Enphase and Shopify. Microsoft here is still very much in the context of this downtrend. Support level is sitting roughly at around $311 per share, but still showing signs of some weakness. Not quite oversold. Maybe it is. Maybe RSI is starting to show signs of some upside here. MACD also on the verge of crossing above that signal line, so there is potential upside here. Google pushing up very nicely, 2.2% move to the upside. Resistance all the way up to $139 per share for Google. So that right there is going to be that resistance. Support level at close to $126 for this company. And then finally, we got Enphase and Shopify. And Enphase here getting a nice move back up, 2.5% upside, still inside this green rectangle, so not really much for us to go over, but seeing it back up over $117. Resistance is going to be $128. And finally, we got Shopify pushing up a little bit over 2.3%, so resistance is going to be at 54, and we got a gap to fill right over here for Shopify, which may or may not eventually get filled. We'll have to find out. But resistance is going to be at 54 bucks at the moment. So hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. Like I said, I did open up a few more spots if you're interested in joining us. And of course, engaging with over thousands of members all over the world that are going to help you with fundamental technical analysis, trading ideas, alerts. Everything's going to be included with these stock reports, Excel spreadsheets, members-only private videos. Everything's going to be included. Link down below. As always, happy investing, and I'll see you all in the next video.